Welcome once again. So, in today's analysis, I'll be showing us on how to identify market structure, how to identify market structure. And to identify market structure, there are some concepts that we need to understand. They are very important. So, the number one thing you're supposed to know is candlestick chart. Candlestick chart. This is an example of candlestick chart. So you can see the movement of the candlestick. These are the candlestick. You have series of candlestick here. Then the second one is can identify market structure through moving average. Through moving average. So moving average will show you the trend at which the market is going. If it is a upward trend or downward trend. So let me use this 50 moving average to buttress more of my point here. As you can see from 1 hour time frame here, that we have a particular trend here. This a trend right from this level. Let me put an indicator there. Right from this particular level to here, which is another area. I mean, it stopped here. You can see that the upward movement started from here and it ended at this area from using a moving average. As you can see the trend move in this direction this way. You can see the way the trend is going. Then there is a pullback in this direction. So that's moving average uh, trend. So I'll still buttress more on it if the time permits me today. So how do we identify uh, uh, market structure using candlestick chart pattern? So there are methods for us to identify uh, market structure. The number one way for us to identify the market structure is we'll first of all zoom in our charts. We'll zoom in the charts for us to know what trend is the market creating on a particular time frame. We are currently on 1 hour time frame, and on 1 hour time frame, you can see. Let me zoom in very well so that you'll be able to see the trend of the market. So you can see from 1 hour time frame that the market was previously on downtrend, and presently, if you can see it clearly, the market is on a uptrend. But let's go to the higher time frame. We'll go to the higher time frame to see more clearer picture of the trend. So from higher time frame, which is the uh, 4 hour time frame, can see clearly the trend of this particular trade. Can see clearly the trend of this particular trade here. As you can see from here, so the trend is a downward trend. The trend is a downward trend, and for us to believe that this particular trend is still on downward trend, that means there must be a particular breakout from this particular area. There must be a breakout either here or there. So there must be breakouts in those two areas that I highlighted. So for us to know that the downward trend has finished from 4 hours time frame. I believe you are getting my point here. So this 4 hours and going down to the lower time frame, can see the trend here. So it was on downward trend. Let's use 50 MA. to understand it clearly. So from 50 ME, we can see that the movement was right from here, slope down. Possibly the market is about to break this area, but it has to come down to this direction. There was a break here and later come back to that place. You can see the trend there. You can see the trend. So the market was creating a trend. It was creating a trend, which is a downward trend, which is downward trend. Then how do you now know that the market is on downward trend? You know by seeing multiple series of lower high and lower low, multiple series of lower high and lower low. So what do I mean by lower high and lower low? So this is a lower high, this is a lower low, this is lower high, this is lower low, there is lower high. Let me delete this and use more tiny thing. Delete. So this is lower high, then another lower high here, this lower high too. There is another lower high here, and excuse me, lower high. So another lower high here. You make sure that you see the one that are obvious to you. You see the one that are obvious to you. That is another lower high. So you can see what the market is trying to create here. So this lower high, lower high, lower high. So let me adjust this to fit in because we are going to trade this particular market this week. We are going to trade it this week. We are going to trade it this week. This is a lower high. And then can see another lower low. So here is lower low, lower low. So let me draw another lower low. This lower low. Those are area of lower low and lower high. Then another lower low in this area. Lower low. Don't mind me. I'm trying to manage my chart area. So this is another lower low. You can see the series of that lower low and lower high. So lower high. This where we are expecting this particular market to reach. So that's area of lower high and lower low. That's where we are expecting the current trend, the current movement. This is the area we are expecting it to reach before we now take a decision whether there is a break of structure or there is a, a, a continuation of a downward movement. So I believe you understand this concept. So another one I'm going to be sharing is to identify uh, the up trend. Don't forget we are talking about the how to identify market structure, how to identify market structure. So I'm going to look for another currency pair for me to explain this uh, movement, this upward movement. So I've used USD JPY to explain the downward movement. So let me clear the chart. Let me clear all the charts. So this US JPY GBP USD, and from GDP USD you can see the movement of the market. So presently the market is on up trend. The market is in uptrend, and for us to believe that the market is in uptrend, I said earlier, you zoom in your charts to the most obvious area. So this our most obvious area. So you can see that the market was in uptrend. Let's speak from this area, which is more recent. This is an area. So this is most obvious one for us. So we use this to buttress more on our point here. So in uptrend, you have series of higher high and higher low, higher high and higher low. So for an uptrend, don't forget for downtrend, you have series of lower high and lower low. But for uptrend, you have higher high and higher low. So where is higher high and higher low? This is our higher high of this particular trade. This higher high, I'm still going to adjust them. This is another higher high. This higher high. This another higher high. And we have the last high here, which is the last high. We have high here. We have high here. Then for lower low, let me use line to do that. So this higher low, this higher low, there's another higher low. I'm about to touch this area as well. So let's recognize this. Then we have another higher low here. We have higher low here. Let's pick this. We are just trying to pick the ones that are obvious. Then let's pick this. So that's the series of higher high and higher low. So this is our higher low. This high. There is another higher low here. This higher low. So I'm supposed to I'm supposed to adjust this to fit in for proper understanding, but I'm just using this to explain how it is. So if you look at it, so this the most high here, this is the most high here, this is the most high, and this is the most high, and this is the lower low here, this is the low here, this is the low here, and this is another low, this is another low, this is another low. So let me put this here because it's obvious. This place also is obvious, it's high. So we are still going to recognize this area because the market move up and later comes down. So uh that's for upward movement. Then For the last market structure, we talked about a range market. So let me use this to explain a range market. So what range means that the price contained within a particular high and low. So the price will only be moving in that particular area. So as you can see here, as you can see here, let me adjust this a little bit. Let me adjust it. Good, 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 good. So I have to zoom in the charts. I mean zoom out the charts for obvious for us to be able to see it clearly. So as you can see the movement of the chart here, there are series of up movement and down movement. So the market move in this direction back to the low, move up, was ranging here, then still back to this low, move up, move up, break the structure and stick back to this particular low. So it shows that in this particular area, the market was actually in a range. So the market was actually in a range. So you will be looking for buying and selling opportunity in at the same time. So you can buy from here and you can also sell from here. You buy from here, you sell from here. So that's what a range market is all about. You buy here, you sell here, you buy here, you sell here. So the market will just be moving in that particular region. So that's what a range market implies. That's what a range market implies. That's what a range market implies. So let's check what can we then do in those structure that I have identified. So in either of the structure, as a forex trader, in either of the structure, you can buy and you can equally sell. You can buy and you can equally sell. So you can see from this particular upward movement, so you buy from this area, then the market stopped here, so it has to come back to that area too. So that means this particular area is a very strong area in the chart. So you sell here, you buy here, you sell here. So it was not coming back here, so you sell from here, you buy from here. I believe you are getting what I'm trying to explain here. Then another one, you buy from here, you sell from here, you buy from this particular area. So the market actually did not touch that level. So that's what we are trying to do now. We are adjusting it and see that this place is an area, and that area is area of support and resistance, which we are not talking about today. We are not talking about support and resistance now. So as you can see, so as you can see, that the market actually fits in the chart, fits in the chart. So looking for buying and selling opportunity at the same time. At the same time. So thank you for your time today. I want